These are 4 uncomfortable retirement truths that we all need to hear. And the first one, as a financial advisor, for most of us, we're going to need to have stocks in our portfolio. And because of that, the financial journey is going to be bumpy and there's going to be some scary days. I wish that wasn't the case, but for most of us, we need our investments to beat inflation over time. And in the past, the best way to do that has been stocks. I don't have a crystal ball, but I think the best way to do that in the future over the long term is going to be stocks as well. But unfortunately, bear markets where the market goes down and corrections, stock market corrections, scary stock market corrections, are a feature of the stock market. It's not a bug. So if we're retired for 30 years, it's highly likely we're going to see 4, 5, 6, maybe more, maybe less, scary stock market periods that might cause us to stay up at night if we're not thinking about this ahead of time. So that's the first uncomfortable retirement truth. The next uncomfortable retirement truth, hopefully somewhat aspirational, but it is there are some risk worth taking if you're close to being financially independent or you are financially independent. Maybe it would feel more comfortable to have a little more money. Or maybe you've already done that once. You've said, when I get to this milestone, I'll have enough. And then you say, well, another 100,000, another 200,000 would be better. And so at some point you have to take that risk. You have to take that leap of faith. We have to take that leap of faith with our finances. We also have to take that leap of faith with our identity and our purpose. It's really hard to think through what your new purpose and identity is going to be on the other side of retirement. But if we wait to figure that out to retire, we might give up what some of our healthiest and most active years in retirement could have been. Which brings me to uncomfortable truth number 3, which is, unfortunately, when we're 60 years old, most of us are going to have less than 1,000 weeks of healthy active time remaining. And that's not a lot of time, right? And so, yes, if we wait until we have everything perfectly aligned, we might get a little more comfortable, but I'll give you a secret. When we get everything aligned, there'll be other pieces that are going to be out of place. It's a never-ending challenge for all of us. So at some point, we have to take a leap of faith. So there's a leap of faith on our purpose and our identity. There's a leap of faith that, when we deal with a financial advisor and they run the numbers and they say you have enough money to retire, there's a leap of faith that's required to say, okay, I'm going to trust that. Because the safe and secure thing financially to do is to just keep working. Right? The way to maximize your retirement accounts and to minimize the likelihood of ever running out of money is keep working until we die, right? But that doesn't sound like a whole lot of fun for me, and I think most people want more out of life than that. So it requires a leap of faith. And then for many of us, it also requires a leap of faith when we go to a financial advisor and maybe they say, okay, you have a 85% chance of never running out of money, but I, Mr. or Mrs. Financial Advisor, would like to see you be 95 or 97% likely to never run out of money, but you're at 85%. So I think you should, the financial advisor, think you should keep working. Maybe. It depends on your situation. Remember, even an 85% likelihood of never running out of money, that's 85 times out of 100, you're not going to have to make any modifications. And in those 15 times out of 100 where you get unlucky, and typically what ends up happening is one of two things. You are unlucky and you get bad returns early in retirement. It's called sequence of return risk. And those bad returns are impacting your entire nest egg. So it matters when we get bad returns. So none of us know, in the next 3 years, is the stock market going to be awful? If so, the people that retired recently, they're going to feel that pain. But it takes a leap of faith. So those are the 15% of people when your advisor says you've got an 85% likelihood of never running out of money, and you think, I'd like it to be 95, 97%. That's that 15 to 17% that got unlucky, that unfortunately their money's not going to last them. But what do, right? We don't fly that plane into the ground. We look and say, okay, last year was tough in the market, and we adjust. Maybe we spend a little bit less. Maybe we get a part-time job, right? But in 85% of the cases, we don't have to make any changes. So there are some risks worth taking, even if they feel a little scary to us at the time. Okay, the next one is, unfortunately, and this might be the scariest of them all, unfortunately, we cannot control the journey. And you know what? More money doesn't solve for many of these things, right? And let's talk about the non-financial ones first. None of us know how long our health is going to last, or whether we're going to keep our mental acuity, or unfortunately maybe suffer from dementia, right? So that's the life standpoint. None of us know how long we're going to live. Maybe we get unlucky and we have a heart attack or a stroke, and it ends up being fatal, right? But when you have your ambulance moment, is what I call it, when we're driving down the street now and we hear an ambulance coming, we all pull over. And at least in my case, I share some positive thoughts as that ambulance drives by, and I hope it all works out for that person. But you know what? Someday it's going to be my time. It's going to be Azul's time to be in the back of that ambulance. And unfortunately, someday it's going to be your time to be in the back of that ambulance. And when that moment comes for me, when it comes for you, I want us to be able to say, I minimize my regrets. I have very few regrets. I lived life to the fullest. I took full advantage of the life I was given, including the last couple chapters, which right now, many of us are in what I call the youth of our senior years. And we want to take full advantage of that. So when that happens, but life is out of our control. We don't know when our ambulance moment is going to come. We talked about the non-financial things, but just think about this. None of us know what income tax rates are going to be in 2026. Are they going to sunset back to what they were before they got reduced, or are they going to stay the same? Or are they going to increase? None of us know. We don't know what inflation is going to be. We certainly don't know what the stock market returns are going to be. So money can only help with certain things. And then life just requires a leap of faith. You do the best that you can. You realize that you're adaptable, that things happen. Look at the pandemic. None of us saw, well, maybe you did, but I didn't see the pandemic coming. And we had major adjustments to our life. And some people, unfortunately, suffered really bad sicknesses, and some people had people that they loved and cared for that unfortunately died from COVID. So we as a society, we as human beings, were adaptable, and there are some risks worth taking. And then the next one is just thinking about, what's really important in life. And as I think about what's important in my life, right, it's my relationships, it's experiences, it's having the freedom to do the things I want to do, it's having adventures, and it's having my health, because once my health is gone, then it becomes a lot more difficult to enjoy the journey. So those are the reminders, the uncomfortable truths. And another uncomfortable truth is we all need to think about when we retire, right? And that's why I made this video up here. Why retiring at 65 might be a big mistake. It's kind of part 2 to this video. I'll see you in that one. Thanks for watching this one. Bye-bye.